If you looked at your portfolio on Tuesday, you probably felt sick. You saw Oracle crashing, you saw headlines about AI funding drying up, and for a moment it looked like the bears were finally right. The narrative was everywhere. The AI bubble is finally bursting. But if you looked at the market yesterday, everything changed. In the span of 24 hours, we witnessed one of the most violent reversals in recent stock market history. One single company didn't just beat earnings, they effectively saved the entire 2026 bull run. But here is the problem. 90% of retail investors are celebrating the wrong number. They're looking at the revenue beat, they're looking at the stock price jumping 13%, but they completely missed one specific sentence in the guidance call that proves the AI trade isn't slowing down. It's actually accelerating beyond what the supply chain can handle. We are witnessing the Great Divergence, a split in the market where the weak hands are being flushed out and the kings of the industry are consolidating power. Today on Stockomo, we're going to break down exactly why Oracle crashed, why Micron exploded, and why this specific signal just gave us the roadmap for Nvidia, AMD, and the entire tech sector for the first quarter of 2026. Do not sell a single share until you understand this data. Let's get into it. Welcome back to Stockomo, where we don't just read the news, we find the profit hidden inside the panic. If you're new here, my goal is simple, to give you the institutional level insights that the mainstream media glosses over. So if you want to stay ahead of the algorithm, make sure you smash that subscribe button. Now, to understand why this week is so critical, we have to look at the battlefield. We're heading into the final stretch of 2025. The CPI inflation report just came out cooler than expected, signaling that the Fed is likely to cut rates in early 2026. That is the macro backdrop. Money is about to get cheaper. But in the tech sector, there's a war going on. A war between the AI believers and the ROI skeptics. The skeptics believe that companies are spending billions on AI chips with no return on investment. The believers think we're just in the first inning of the fourth industrial revolution. This week, both sides got hit with massive ammunition. First, the bears got their moment with Oracle, then the bulls got their savior with Micron. Let's start with the bad news first, because you need to understand the risk before you can chase the reward. Let's rewind to Tuesday. Oracle, a massive player in the cloud space, saw its stock drop over 5% in a single session. This drags down the entire Nasdaq. But why? It wasn't because their technology failed, it was financial. Reports surfaced that investment firms, specifically Blue Owl Capital, were pausing or reconsidering equity funding for AI data center buildouts. Now, why does this matter? You have to understand how the AI boom is funded. Many of these massive data centers aren't built with cash on hand. They're being built with debt and private equity funding. It's a leverage game. The plan is borrow money, build the data center, buy Nvidia chips, rent them out, and pay back the loan. When the news broke that the lenders were getting cold feet, the market panic was logical. The fear was if the lenders stop lending, the builders stop building. If they stop building, they stop buying chips. If they stop buying chips, Nvidia and AMD earnings collapse. This is what we call counterparty risk. It's not about the technology, it's about the credit card getting declined. For 24 hours, the market prices in a recession for AI hardware. The bears were shorting everything. They were calling for a 20% correction in the semiconductor space. It looked like the beginning of the end. And honestly, if that were the only news we got this week, I would be telling you to raise cash right now. But markets move fast. And on Wednesday afternoon, Micron Technology stepped up to the microphone and completely shattered the bear case. Micron Technology, ticker symbol MU. Usually, memory chips are a boring commodity, but in the age of AI, memory is oxygen. You cannot run an Nvidia Blackwell chip without massive amounts of HBM, high bandwidth memory. Micron reported earnings and they delivered what Wall Street calls a double beat and raise. They beat on revenue, they beat on earnings per share, and most importantly, they raised their guidance for the next quarter. But I want you to ignore the headline numbers for a second. I want to focus on the one detail that matters for your portfolio in 2026. During the call, Micron management confirmed that their HBM production is sold out. Let me repeat that. They're not just sold out for next month, they're effectively sold out for the entire of 2025 and are already allocating supply for 2026. Think about what this means in the context of the Oracle news. The Oracle news told us that funding is drying up, but the Micron news tells us that demand is exceeding supply. If the AI bubble was truly bursting and if customers were truly going broke, Micron would be reporting order cancellations. They would be reporting inventory pileups. Instead, they're reporting the exact opposite. They are reporting that they cannot physically make these chips fast enough to satisfy the hunger of their customers. This startup validates the most important thesis for tech investors. The demand for AI infrastructure is not coming from small, debt-reliant companies. It is coming from the hyperscalers, Microsoft, Google, Meta, and Amazon. These companies have billions in cash. They don't need loans from Blue Owl. They don't care about interest rates. They're in an arms race, and they're buying every single piece of silicon available. Micron just proved that the AI winter is canceled. So how do we reconcile these two events, Oracle crashing and Micron moonshotting? This brings us to the core concept of this video, the Great Divergence. For the last 2 years, you could throw a dart at any stock with AI in the name and it would go up. That era is over. We're entering a phase of the market where execution matters more than hype. The divergence is happening between the haves and the have-nots. The have-nots are the companies relying on easy money and hype to build out capacity. That is the Oracle story. The haves are the companies that own the intellectual property and the manufacturing capability. That is the Micron, Nvidia, and TSMC story. What Micron's earnings told us is that the hardware supercycle is still intact. The plumbing of the AI revolution, the memory, the GPUs, and the packaging is still the most profitable place to be. We're seeing a rotation. Smart money is selling the speculative software plays and piling back into the foundational hardware stocks. They know that even if the AI software doesn't perfect human speech next year, the data centers still need to be built. So what does this mean for your money on Monday morning? How do we trade this? Because Micron is a leading indicator, it gives us a crystal ball for 2 other major stocks. First, Nvidia. Micron provides the memory for Nvidia's GPUs. If Micron is sold out, it implies Nvidia's order book is rock solid. The fear that Nvidia's growth is plateauing has just been debunked by its own supplier. Historically, whenever Micron breaks out on HBM news, Nvidia follows within 2 to 4 weeks. If you were looking for a sign to buy the dip on Nvidia, this is it. The floor is in. Second, Google. Alphabet. Why Google? Because Google is one of Micron's biggest customers. They're buying these chips to power Gemini. Just this week, Google flipped Microsoft to become the second most valuable company in the world. The fact that they're aggressively securing memory supply tells me that their CapEx spending is going to remain high. This is bullish for the stock because it shows they're confident in their product roadmap. Here's my verdict. The volatility we saw this week was a bear trap. The market flushed out the leverage, scared the retail investors, and then ripped higher on real data. Do not bet against the hardware cycle in 2026. I want you to watch the $115 level on Micron. If we hold above that, the path of least resistance for the entire semiconductor sector is up. I'm going to be tracking the institutional money flow into these stocks all weekend long. If you want to see exactly which price levels I'm watching for entry, make sure you're subscribed to the channel. The AI trade isn't dead. It just got a lot more exclusive. Thanks for watching Stockomo. Keep your risks managed, keep your charts clean, and I will see you in the next video.